This is especially helpful if you tend to be not disciplined with your trades and take a lot of random trades. What is a playbook? A playbook is just a database of the trades that make most sense to you. I will show you how I build my own playbook. This way will be easier to you if to understand by seeing it. But just imagine a file, a book, like a database of all the trades that make sense to you. This right here again is the most important video in this training at the moment, and if you want to make it quicker, just hit the double speed button and use subtitles. I did not come up with the playbook concept. It's something I learned from a book actually, and the book is called The Playbook by Mike Bellafiore. Mike Bellafiore is the owner of SMB Capital, which is one of the biggest prop firms in America. He trained hundreds of 7-8 figures traders, so I really listen to this guy, and he says that the concept of the playbook saved his whole company. So why do we need to do all this work and spend hours looking at the market trying to find trades that make sense to us? Well, number one, this exercise will train you to only take the best trades, and automatically you will most likely not take shitty trades that don't make any sense. But you will, having a playbook, it will make you focus on taking the good trades, not the bad ones. And then number three, if you constantly review your playbook, you will build unconscious competence. So you will basically install these traits like a software in your brain, and you will automatically take these good traits and act in a good way. Clarification: the trades that are in your playbook are not trades that you have to take or that you took already. It can also be trades that when you scan the market, you see it, you weren't on the charts or you weren't working or anything, but you see a trade that makes sense. It's like, oh, that's a trade that I want to take, that I could have taken. Okay, you can do this work scanning the market, looking for trades daily, weekly, monthly, once a year. I recommend doing this work at least weekly or daily until you have 3 to 5 trades that make sense to you. Then once you have 3 to 5 trades, that's it for you. You don't have to take 20 different trades, right? And you can always review and improve your playbook too. What I like to do in my own playbook, I like to organize the trades between market trending trades, ranging trades, and fading trades. This helps me understand what setups to take when I sit in the morning on the charts and I see the market conditions. Let me give you an example. I sit down 6 a.m. and I see gold trending. In that case, I know automatically that I won't fade the market because it's trending. I don't want to go against the trend, right? So I will, okay, today I only take this setup and this setup because those are my trending setups, right? All this work organizing your setups, trust me, will help you a lot. This slide right here, pay attention, because this is the process on how to catalog your trade into your playbooks trades. So it's very easy, it's very simple. If you read the book, it's way more complicated. There are like 10 steps, but I basically made it into 5 steps. This way it's easier for everybody. Number one, the big picture. So what is the event that happened in order to have these trades? Especially if you trade stocks, this is important because you want to trade stocks that are in play, there are some news behind it, right? That are moving. A little bit less important for like scalpers like me on futures. That it's good to trade when there is volume in the market, but if you're scalping futures, there is almost like you don't need a macro event in order for the market to move. Number two, technical elements. So for the trade to be valid, what do we need that needs to happen? For instance, the trade needs to break a level, we need the RSI in a way, we need to be above VWAP. So what are the technical elements that will make this trade happens? Number 3 is execution, so how would you execute the trade? Number 4, trade management, so what are the actions that you take to make money out of this trade or to protect yourself? And then number 5, the if-then statements. The if-then statements concept, I promise you, is the most important concept of all the 10-20 videos in this community, and I will explain it to you later. Let's go in detail, and then I will show you my playbook trails. So the big pictures, what is happening in the market? Again, that's the first point, right, in a playbook. You can have macro news like elections, war, earnings, NFP, I don't know. And then, is the market trending, is ranging, is the market strong, is the market weak? So when does this trade up? What is the environment of the trade? Technical elements, is the market at a key level? Or for instance, it could be we push into the New York session with a closing above VWAP. Did we break this key level with volume? Whatever your strategy, your edge is, I don't know, you need to find the technical elements that will make that trade happen. Execution is when and how you will get in that trade, you will pull the trigger. Examples, after push with volume, enter 50% of the trade on the 1 minute candle close. Wait for a pullback to the previous level to enter the other 50%. Put the stop loss below the high volume candle and risk this amount per trade. Management. What are the take profit levels? I will take profit, I don't know, at the relative high or after X amount of ticks, I don't know. When would you move the stop loss? So after take profit 1, maybe move the stop loss, a break even, and protect yourself. All these rules are part of the risk management. Adding to the trade is another risk management tool. Even though adding to trades is expert pro level thing to do, together with edging, adding to trades is one of the most difficult things to do. So if you're a beginner, don't even worry about it. And risk management is also means protect yourself in case of exceptional events, like, I don't know, the market drops and you don't have the stop loss in, or the markets, the moment you enter the trade you have a 100 tick candle. What do? So basically make sure you are prepared and you really described every action, because by doing this work, again, once you are live and you have the emotions kick in and then you see the money on your account, it's hard for you to really, like, act perfectly. But by having all these rules in the back of your mind, you will be most likely to perform better. The last thing for the playbook is the if-then statements. If-then statements is just a very, very powerful concept. So here, what you're doing by building a list of if-then statements is you're building the rules to act like an algo, like a robot, right? And you're saying, if this happens, then I will do this. So you're planning all the actions that you're taking, that you're going to take. Example, if the market ranges for X amount of minutes after the entry, close 50% of the trade. So you're protecting yourself because the market is not moving. Or if we get a close below the execution candle, close the trade. Stuff like that. All these actions are most likely discipline action to protect yourself. Very, very important, very powerful concept. So now let me show you my playbook. I should have it right here. Playbook. Okay. This is a trade. It's called the back in range trade. This is the story of the trade. It happens when market created a clear range, support or resistance, breaks the range, power, then comes back into the range. So this is the catalyst. For this setup to be valid, we need clear resistance or support, preferably the previous daily high or low, a push that breaks the resistance with volume, push, volume, a cycle top on the 5 minutes or on the execution time frame. Cycle top for me in my edge is the stochastic being at a certain level. Doji in the direction with the breakout with high volume, doji, high volume right here. Candle after doji that breaks the low of the previous candle with big volume against against the trend and closes back in range right here. This candle right here closes back in range below the low of the previous candle. Optional, any catalyst like a news. Okay, so this is the story of the trade with the technical elements. Then we move into trade execution, wait for the market to close back into the range and execute a candle close right here. Stop loss above previous candle right here. Take profit 1 after one candle and then put the trade to break even. Take profit 2 after the second push right here. One candle, second push, out of the trade. This is a scalp, so it's very quick. If thens, if the market closes back in range with a 3 or 4 candle formation and volume, enter a trade with size. If thens, so the first one is when to enter a trade. If the market closes back in the range within 3 or 4 candles with volume, enter a trade. So it breaks the trade, and between 3 or 4 candles I want the market to close back into the trade. If the following candle closes in profit, take 50%. This is a momentum trade, so usually the candle is a big one, I'll take 50% off. I'm a scalper, so I trade quickly. If the market pushes again in the trade direction, so in my favor, wait for a reversal candle to exit, or if market takes relative low high, then close it. So you either wait for a reversal candle, in this case this formation right here for me is a reversal, the doji plus big candle, or you wait for the low, the relative low, in this case we are shorting, to get out of the trade. If the candle after the execution closes out of range again, exit the trade. See, here I'm protecting myself, and I'm saying if this candle closes out of the range again, exit the trade. Don't wait for the stop loss to be hit, right? It's not an A plus setup, we don't need that. Close it. If the following 2 candles still have not produced momentum, exit the trades. So if I enter here and the market starts doing all small candles here, it's not an A plus setup for me anymore. I'll wait for the next trade, I exit these ones. So all this is how you build your playbook. As you can see, I have 4 trades. This is a long that I take. I call it consolidation below high of the day scalp. I have many of these, right? You don't need many of these. You can be very profitable with 5 setups, or even with 1 setup if you really master it. So you don't need many of these. But this is the playbook. Make sure if you have any question to tag me in a post or save your questions for our Q&A sessions. And now go on and build your playbook. Ciao.